What's up, guys? This is Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, and the overall markets. I'm going to break down some big news that came out that's causing some high volatility and what the charts are suggesting so far as we're seeing some new developments. Just know that I am not a financial planner, so take nothing I'm saying as financial advice whatsoever. And also, if you guys can, please check out my Mumu link that's down below or use my QR code right here to sign up. If you sign up for Mumu with the link down below and deposit $100, you're going to get $20 of free Nvidia stock. If you deposit $2,000 or more, you're going to get $50 worth of Nvidia plus a $100 cash reward. Deposits $10,000 or more to get $300 worth of Nvidia plus $100, or deposits $50,000 or more to get $1,000 of free Nvidia stock plus $100. You're also going to qualify for an 8.1% APY non-invested cash, and the offer ends very soon. So please use my link down below to sign up. Anyways, now let's talk about what's happening with the markets. So as far as the market's going right now, we got this massive gap up on SPY, and instead of slowing down and losing any key supports, the market continued to push. We went over this in my second video of the day where we talked about how the market was looking more bullish, favoring new all-time highs, and that's what we're doing again. So the honest truth is that we are bullish until we're not, meaning that for now, the charts are still pointing upwards. We're still pushing very nicely, and there's no sign of us turning down yet. Although I do think it would be very healthy for us to come back down to fill these gaps first before continuing. But honestly, I don't really see that yet. And I think that for now, we just have to follow the trend in front of us. When you look at the 4-hour time frame on SPY, we're just looking straight up bullish. There's no sign of the market slowing down. We were chopping for the first couple of hours, then we slowly started to climb up to new all-time highs on SPY. And for now, we're looking very, very optimistic. Same thing with the QQQ. In fact, the triple Q was more bullish than SPY. We broke out today. We slowly just continue to pump and pump and pump, and we're still looking more bullish overall as buyers continue to step in. So for now, the buyers have a much bigger edge. So the question is, what's going to happen as time goes on? What is the news telling us? There will be some data coming out for tomorrow. Then we're going to talk about what's happening with some geopolitical news and how this may affect the charts. So I first want to mention that tomorrow is going to be Tuesday, October 28th, 2025. Okay, at 9 o'clock a.m., we have some housing data, which is quite minor, but at 10 o'clock a.m., that's 30 minutes after the stock market opens, we have some important manufacturing numbers. We have the Richmond Fed Manufacturing Index, shipments and revenues all coming out. We also have the Dallas Fed Services data at 10:30 a.m. So expect some volatility 30 minutes and 1 hour after the stock market opens tomorrow, as this data is going to likely cause a big move. So be ready for that. And then also know that for Wednesday, we also have the FOMC meeting, which is going to be very important, with Jerome Powell giving a speech and giving us some updates about interest rates. For now, all this excitement associated with FOMC and the fact that the last time Jerome Powell spoke, he mentioned that there is going to likely be a transition to quantitative easing, although the Fed has to look at the data to confirm that. Quantitative easing is once again helping the markets push alongside all the news involving the US and China. But right now, there's a 97.8% chance we get a cut by the Fed by 25 basis points. The market's very optimistic associated with FOMC. On top of this, there was some big news that came out over the weekend. There is likely going to be a trade deal between the US and China. And what's happening is the officials from both sides are setting the framework together so that President Trump and President Xi Jinping can once again sign the deal once they meet up in just a couple of days. So this is massive news because this is going to be affecting hundreds of billions of dollars worth of goods, especially semiconductors. What's happening is this deal could delay the export controls on the rare earth materials and minerals by a year or so, and then that would also delay President Trump's tariffs. On top of this, China may be buying more U.S. soybeans, but we have to wait and see specific details. For now, it looks like there's been a lot of talk about how a consensus has been drawn, and once again, we're in a very, very good state for the deal to be signed in just a couple of days. This is very, very bullish news because once again, the tension between the U.S. and China caused a lot of volatility. As you remember, we got that massive sell-off just a couple of weeks ago, only for the market to get bought back up as tensions began to cool between the US and China. So we're going to see what happens as time goes on, but as of right now, the market remains more optimistic. On top of this, I just want to mention that there's also been a lot of agreements being made between the US and many other Asian countries. The US is going to be maintaining a 19 to 20% tariff on Malaysia, Vietnam, and many other countries like that. And we're also seeing a lot of talk about that. Simultaneously, when it comes to the overall, 100% tariffs or even 155% tariffs on China, the market does not believe these are going to be sustainable, as President Trump had said. And simultaneously, they're likely not even going to be imposed to begin with now that we have this potential deal. So that's part of why the market's pumping the way it is. And this has a very, very big effect, especially on like semiconductor stocks. That's what's really leading the tech sector a lot higher right now. That's why we're seeing stocks like Nvidia taking off. I think that's some very, very big news. It also has a ripple effect in the markets. That's why we're seeing like the overall market kind of like following the trend. So that's a very, very big thing to remember. Now, something big for tomorrow to remember is that starting tomorrow, we have SoFi and PayPal announcing their earnings in the morning. That may also cause more volatility. After market close, there's not really much coming out. Then on Wednesday, we have Verizon and Boeing in the morning. Then we have Meta, Microsoft, and Alphabet in the afternoon. So expect some volatility with them. And then in the morning, there's not really much for Thursday. But then don't forget, we also have Amazon, Apple, and Coinbase, announcing their earnings after market close, which means that we have big tech earnings for Wednesday and Thursday. So be ready for some higher volatility. On top of this, I just want to mention that the fear and greed index is currently at fear. That's making up the majority of sentiments. We're getting closer to neutral as the market pushes higher. Momentum's at extreme greed, and then we also have the puts call option ratio dropping as more shorts are being closed, and the VIX is dipping right now towards its main support, which tells us once again the market just remains more bullish. No sign of stopping so far. So now let's just focus on the charts. What's going on? Why is the market pumping? As you know, all this optimistic news involving the US and China is launching the markets higher, as it looks like a trade deal is coming soon. Simultaneously, the market is going to be very optimistic with FOMC coming up because Jerome Powell used the words quantitative easing, which is a big shift in monetary policy, which tells us once again that the Fed is kind of like easing up on policy. And as you guys know, the US economy and our stock market loves cheaper money. They love the idea of being able to borrow at lower costs. And that is what we're starting to see, more cuts coming out and the Fed easing up. Now, inflation did go up a bit, but this was aligned with expectations. And core inflation, so core CPI, that actually came down. The market was more optimistic about that, and we're just continuing to go. Now, my warning for everyone, there is one warning I just have. Although we're pumping, and yes, we could be going higher from here, don't forget there are still these gaps to fill in, but there will likely be a time we come back down to fill these gaps. I'm not sure if it's going to be after FOMC, if it's going to be after next week, whenever the time is going to be. But that's why you want to always have a game plan in case we do end up going south, because there's so many unknowns still in the markets, from FOMC to big tech earnings. However, the charts still look bullish, so we're just going to play the charts in front of us. So here's what I'm going to basically watch for. It's very simple, actually, okay? So if you want to be a bear, if you want to see the market basically dump, you first want to watch for our key levels. If SPY ends up losing support at essentially 682, right over here we have 682 as the main support. If that fails us, there's a big gap to fill back down towards 680, and then 677 would be coming next if that breaks. That's the bearish case. So make sure you watch 682 as our main support. This is where SPY was bouncing today. If you're bullish, it's basically the same thing. Again, you want to see us hold above 685. I think as long as we're above 685, we're still favoring upside. Looking for 686 and eventually 688 next for new all-time highs on SPY. And one thing we're doing is we kind of like chop around in the mornings, then we slowly start to creep up as the day goes on. So that's going to be the more bullish case. As of right now, okay, what happened was the market was slowly climbing higher today. We did see some chop in the morning, but overall, we are still looking more bullish. So it makes no sense to just turn into a big bear from here unless we start losing like 682. I hope that makes sense. So in the morning, we might consolidate, but overall, the trend is going to be favoring new highs. SPY still looks bullish. I would not rule out the possibility of 686, then eventually 688. As of right now, the chart looks bullish, plain and simple. So follow the chart in front of you and be more unbiased. On the QQQ, the same thing is going on, okay? Right now, we're basically trying to go for this like 630 zone. Now, if you want to be a bear, you know there's this gap to fill overnight. You want to see us lose this support right here, at least from the pre-market near the 624 area. If we dump and lose 624, of course, we could be dipping back down towards 620 or below. However, if we're bullish, if we end up breaking past 630, we're looking for an attempt to push towards 632 or above. In my opinion, the QQQ is looking more bullish, and this is favoring 630 plus for more upside. I think we're doing a fantastic job, so keep that in mind. We're looking quite good. We still look more bullish. On the IWM, we have kind of like a double bottom. Now, it depends. This one is not as strong as SPY in the QQQ since we got this red bar. If we don't hold 249, there's a risk of us dipping to 248. But if we hold 249, we could be looking for an attempt for 252 to fill this imbalance. We're also attempting to make higher lows here, see how we broke out of this wedge. So the best thing to do is just be very unbiased. My only warning is that there are some gaps to fill on the IWM. There's one way down here, another one down here, but there's no sign of us coming down yet. So it looks to me like we have like a double bottom, and we're going to be favoring 252 as our potential target. And the Russell looks a bit more bullish in my opinion. I think that we still look quite solid. On ES, we're still breaking out as I speak. It's bullish, okay? I was talking about how there's going to likely be a test of 6,900. We actually broke past that so far. Now, if we lose 68.80, we could be tipping back down to fill the gap at 68.40. As long as we're above that, though, we're going to be favoring a push back up towards the 69.25 area, then eventually back up to 69.40. As of right now, ES looks more bullish, and we're going to be favoring the upwards direction. On NQ, if you want to be bearish, you want to see us basically lose support right here around this 25,800 mark. If we fail there, there is going to be a risk of us filling the gap back down to 25,500. But because we're trying to hold 26,000, it's a new territory. This is new territory for NQ. There might be some consolidation here, but we still favor we want to go higher for like 26,100 plus. That's another new all-time high. The trend still looks bullish. Unless we lose 25,800, we're still more bullish looking. We're holding up quite well. Bitcoin pumped and dumped, so we're going to see what happens to Bitcoin. We could be dipping back down towards 113,500. Then we'll see if we bounce again. Overall, we're going to have to see what happens as time goes on, and we want to be very, very patient nonetheless. For Tesla, we pumped to 460. I would say Tesla looks more bullish overall now, unless we lose some critical support, right? Unless we start losing like 440. This looks like an inverse head and shoulders, a nice accumulation from a Wyckoffean standpoint. And that typically favors that there's going to be consolidation like this, then we're going to slowly push higher, okay? I do think Tesla could dip a little bit from here. We could try to retest 445, bounce like this, consolidate, and slowly it's going to try to uptrend as we approach FOMC. It looks more bullish, and this is what Tesla will likely do unless we lose 440 to be more bearish. But for now, the bulls have a bigger edge. On Nvidia, we have a nice accumulation, looks more bullish. We need to lose essentially 188 to be more bearish. Then we'll start dipping to like 185. But as long as we hold support, we're going to likely continue to uptrend back up towards 194 to get back up towards this resistance. So we're still doing a good job, in my personal opinion, holding up. On Appl, we have a double bottom. We're also making higher lows. Now, if we end up losing support right here around this 264 area, we could be tipping to fill the gap at 262. As long as we hold support here, we're going to be looking for an attempt for 270 plus for some more upside, so we still look more bullish. For Netflix, we're dipping a bit. We're still kind of weak compared to the markets, but look, it's trying to form a base, which is a very, very good sign. If we form a base right here around 1180, I could see some consolidation, and then we could be looking for a bounce towards 1126, at least temporarily. For MSTR, we could be tipping to fill the gap back down to 289 before it tries to bounce. It's not looking as strong. It kind of gapped up and started dipping, so we'll look for a small pullback to 289. Then we could bounce off that and continue to push higher. On Celsius, we have a nice looking double bottom. We're going to see if we could break 62.87. If we break that, we're looking for the 63s. But if we lose support at 62, we're looking for a dip. This is favoring 62.8 or above. For Supermicro, we're trying to bounce here. We're going to see if we could form like an inverse head and shoulders. It's very possible this is like a left shoulder. This is like our head. And then we might be coming down just a little bit. We might retest the lower like 50s because we got that wick that was forming to form this inverse head and shoulders and bounce. If we lose 49.68, we have a gap to fill, but we could dip towards like 50 before it tries to bounce, so give it some time. Palantir has resistance at this 190 zone. We're going to see if we turn back down towards 187.5. If that fails us, we could fill this gap before it tries to bounce. I do see a 187.5 retest, and then we'll see if we bounce off that or not. But then there is that gap right here. Might come down to fill the gap first before it tries to bounce, but overall, still holding up nicely. Rivian is going to be favoring a test of 13.54 because we're holding above our EMAs. SoFi is looking very strong now. We do have earnings coming up very soon, so be a little bit careful with this with the whole earnings season, which could be affecting the way the market moves alongside this. However, I just want to mention that 31 is going to likely be our target right here. So with the earnings coming out, this could still push higher. It's still holding up well. AMD is also holding up nicely as long as we don't end up losing essentially 258. This is going to likely reaccumulate and slowly push for 262.5 or above. Lots of chip stocks are looking more bullish with all the news involving China. This is also favoring ARM is going to be favoring 182.5. PayPal has an inverse head and shoulders. We do have earnings coming up though. We have SoFi and PayPal announcing earnings. Don't forget about that, at least for tomorrow. So we'll see how it goes. Might retest 69 before it tries to bounce and break out for 72, so we're looking quite good. Coinbase has earnings coming out later on. It's going to likely dip to fill the gap towards 355 to 350. Then we could bounce off this. Look for about a 4 to 9 point dip before it tries to bounce. Amazon looks more bullish unless we end up losing like 226 to fill this gap. We're going to be favoring consolidation, then a reaccumulation for essentially 229. Overall, we might dip and bounce, so give this the time it needs. Meta is looking more bullish, looking for 755 or above. I think there's upside potential. Google's also going to be favoring 272.5 or above. And then Microsoft is also going to be favoring back a push back up towards that 535 area for more upside. Oracle is also dipping right here. We're going to see if you could hold above this 282.5 area. If not, you could be dipping back down to 276, and we'll see if we bounce. So give this the time it needs. DJT is also forming an accumulation. This might consolidate and slowly push back up towards the 16s. The VIX is also technically on a bit of a downtrend. However, despite the fact that it bounced a bit, I just want to say it's not really affecting the market too much. And it's still technically making lower highs. I need to see it reclaim these EMAs for it to really bounce. It's still weak and the market remains bullish for now. There's no sign of it truly getting a big bounce yet. The 10-year is going to be affected by FOMC. The dollar is dipping, which is typically a bullish sign for stocks. And crude is kind of flat right now, not really doing a whole lot. So what do I think the market's going to do? Honestly, guys, we look more bullish. We just have to follow the trends in front of us. SPY and the QQQ are favoring new all-time highs again. Unless we lose the supports I called out, we're still looking bullish. So I would recommend just playing the trend. Be very, very unbiased with the way in which we look at the charts, and just know that the trend is once again your friend in the way to kind of like look at things for now. There is going to likely be chop tomorrow morning, but then we're going to slowly trend higher. And then we're going to see if FOMC and earnings cause us to come back down to fill our gaps or not. But for now, the charts look bullish, so just play the charts in front of you and we'll see how it goes. Thank you all so much for listening. I'll see you guys tomorrow before market open. Until then, I wish you all nothing but the best and peace out.